Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, May 13th. It is only 5:20 in the morning as I'm starting the video. Quick look at futures. Looks like a soggy start, at least at this point, but we're 4 hours before the open, so a lot of things can change and probably will before the open. But as it stands now, equity futures, the large cap, NASDAQ, and small cap are all off about 0.5%. Oil's down 2.5%, gold down 0.5%, copper down 1%, and TLT is down a little bit. So a lot of things have changed over the last couple of days, and I want to bring those to your attention because I think it's going to take a psychological shift to be successful in the days and weeks ahead. So, it's been my experience that those psychological shifts are often hard to make because we've been programmed over the last year during this bull market, buy every dip because it's worked. And really, it's worked for 10 years, aside from a couple dramatic sell-offs. The dipster mentality is out there in a big way. And I think with the developments that I'm seeing in the chart, we may not want to be doing that just yet. That is buying dips. So let's take a look at it. Revisiting the McClellan oscillators for the NASDAQ and the NYSE. This is NYMO, $NYMO, if you've got that on your charting platform. And you can see here that in general, when you get up to plus 60, it's overbought. And when you get down to minus 60, it's oversold. And you can see that this has done a pretty good job over the years of giving you a heads up to look for a change in the current market conditions. For instance, you get up here to overbought, the risk reward for staying long at that point is diminished because what NYMO is telling you is we're going the other way. And you can see that over the last year, we've had pullbacks when price has got to this level. And by the same token, when you get to oversold, the reward for staying short is diminished. Down here, minus 70, bounce, 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 bounce. And now we're back to minus 60. So I learned a long time ago, don't fight NYMO, right? Because you're not going to win. This is stretching the rubber band in a certain direction, and then that rubber band snaps back, and you don't want to be, max short when that happens. Let's look at the NASDAQ oscillator. Here we see the same thing at minus 60. Now, are these oscillators absolute? The answer is no. You can see here last March, COVID, minus 93. In March we went 93. In COVID we went minus 124. So, could we come down to negative 90? Sure we could. That would be a result of 1 or 2 more days of selling. But my point here is we've got to be on guard. We got to be expecting a bounce very soon. So my message to you is, if you've piled in and are sitting in a ton of shorts, the time is near to start covering those and at least get in a neutral type position and be expecting some degree of a bounce coming up. Okay, moving on to TLT. We had shown this chart yesterday. We broke down below this 138 high volume over price bar. Big support and resistance level. We took that out yesterday, and now in the pre-market we're testing 135. When you break below 135, you're going to come in and test these prior lows in the 132s, and then, like with anything else, you break the prior low, and that opens the door to more robust selling. So even if you're not trading it, watch TLT for a break of 135. And the thing that was interesting about yesterday, we all saw the selling in equities. Usually, when you see equity selling, bonds would typically get a safe haven bid. Let's go to safety. Let's get out of equities. They're selling off. That didn't work yesterday. Really, nothing worked yesterday. Gold didn't work. All the sectors. I think energy squeaked out a green, but they were up 3% in the morning, and most of that was faded. So there weren't many places to hide yesterday. And I think what's going on in the TLT is that traders are challenging the FOMC notion that we're just going to sit on the sidelines and not do rates for a long time. What the bond traders are saying is, with those hot inflation prints, you're going to have to move sooner rather than later. So a bond sell-off now is essentially front-running the Fed, looking forward into inflation, anticipating that the Fed will have to come out sooner than later, saying, we're going to start thinking about tapering, and then they're going to start tapering, and then they're going to start raising rates down the road. So that's what this bond sell-off is all about. Let's move on to the equities, where I want to point out the changes in character. Here's a SPY daily chart. The brown trend line is off the March 2020 lows. Trend line violation, 50-day test. We're on a sell signal. I've got some targets down below, 395, 385, etc. Here's the 200 at 370. And here are the Fibonacci retracements off of the March 2020 lows. Now, you might say, wow, a 38% retracement's all the way down at 345. And my answer to that is, yeah, it is. And the point of laying on the fib retracements are just to show you how far we've advanced and what a simple pullback, a simple 38% pullback, puts us down, what is that? 80 points from here. And from a technical standpoint, a 38% retracement is nothing. Happens all the time. We see it all the time. So that's not some kind of, oh my God, unusual technical event. The trend is still up. Pulling back to a 38% retracement, or even the 200, and it bounces, the bull market is still intact, right? But you don't want to sit long if that pullback happens. You want to be tactical about it, or at least I do. That's my style of trading. So the point here, 50 EMA test, we're on a sell signal. Let's go to the 2-hour and drill down and talk about what we may look forward to today. We're sitting on the 50. That should hold. Now, this morning, I want you to be ready for two potential possibilities. Number one, we either gap lower on the futures, futures sell off into the regular session open, and say we come down here to 402 or 400 or some point down here. Watch for like a flush out move, come down here, and then they snap back, reverse it. If you're short and you get a flush out move, I would be looking to cover on that move down into this gap fill in this 400 area. That would correspond to that NYMO oscillator that we just looked at, moving, stretching that rubber band even further. And then tactically speaking, get ready for a bounce. I think you'll see it. I think if there's the flush out move, pre-market, I think you're going to get a reversal into one of these well-defined support areas. And then I think you'll see it rocket up on a bounce. So be ready for that. The second scenario is we wander around pre-market and, nothing much happens. We pretty much open flat. Then you can look for one of two scenarios. Number one, then they flush it. They don't gap it down, but they sell on the open and they bring it down, maybe fill this gap, and then reverse it. That would be an easier scenario to handle from a trading perspective because you can, there's not the gap to deal with. And then the third scenario is they buy the open and bounce it right from there. So be ready on your trigger finger to cover shorts and get oriented towards a bounce. Now, where could the bounce go? What I've done here on a 30-minute chart, and it's going to be hard to see, but have your pencils ready. I put on, well, first of all, let's back it up. Yesterday, going into the morning, on yesterday's morning video, we talked about this bear flag possibility. First leg down, bear flag consolidation, then the measured move. Notice we fulfilled the technical structure to the penny right here down at 404 yesterday afternoon. So that structure is finished. Could we go lower? Yes. But what I'm saying is there's not a technical impetus to do that. We got what we were expecting and wanting. So on a bounce, these are the fib levels. 408, 409.50, and 1070. And that aligns very well with the overhead resistance band that we've got between 410.50 and 411.50. Those would be the locations I look for a bounce to peter out. The only fly in the ointment is we've got overhead gaps that need to be filled. I don't think they get filled right away. I think we go down before we recapture all this stuff. But if price were to make it all the way back up to 414 and fill that gap, I would be a motivated seller at that point. So the idea here is get long early once it looks like the selling is over and a base is formed and we start going up, get long early, and then you can be comfortable waiting to see where that bounce might peter out, and wait for price to give you that signal. Don't just go in and say, okay, we're up to 408, I'm closing everything. Wait for price to stall. And that way you can just sit long and wait instead of trying to, oh my God, I'm late and now I'm getting long at 408. You don't want to do that. You want to get long down here. Remember, 405 is the 50 EMA. That would be a perfect place to say, okay, we recaptured the 50. I'm getting long against 405. And then I sit and I wait for that bounce to play out. Let's move on. Qs. Sell signal. This is the uptrend off of the March low. Sell signal. Below all the moving averages that are all curling lower. Now is not the time to be long the Qs. If you got short up here, that was the perfect swing entry. We talked about that. We talked about the break of the 50. That would have been on Monday. And then we've gone south. Again, look where the 200 is, way down at 300. And then we've got fib retracements down towards 280. So that's another 10% from here. Is that going to happen? Have no idea. My base case is for a move at least to 305, where you've got some support layers. But given the 200s right here, if you make it down to 305, maybe by that time the 200 is actually up here. But I think you hit the 200 and probably be a healthy bounce from there. 2-hour chart had the opening gap down yesterday, came right into this 318 level, which we had well defined where it kind of stopped. A location this morning, if there's some kind of a flush move, I would look for that down at 313. Or 312, 50 to 313 right here. And I think that's about the most you could get out of a little flush move this morning. Possibly 310, but I would be looking to, if I was short this whole time, I would be looking to cover, or at least be looking for signs of a bounce down in this area right down here. 30-minute chart, fib retracement levels, 38% is 320, halfback is 321, and then you've got the gap at 322.62 going all the way up to the top of the gap at 325. Same idea. You reclaim 317, or if you see a base form below, get long and then wait to see where the bounce plays out and stalls. Then you can cover your long, recycle short. Also, if you've been trapped, say you had some longs that you still have, don't panic into the flush. If you're looking to unload those, what you can do is once you get long for the bounce and you see the bounce stalling, that would be a time to unload any longs that you didn't want and that you felt trapped in, right? Sell into that bounce. And I think that's what a lot of people are going to do. And that's why at a certain point, that bounce will fail, right? Because there's a lot of people trapped out there that, oh my God, I thought this was a dip. And then I thought we were going back higher. And then they pulled the rug again. Now I'm trapped. So when they see that bounce, anybody that's trapped is going to be a motivated seller at a certain point. And that's that point of recognition that I talk about. Hey, buying the dip isn't working, right? It looks like we're heading lower. So any dip buyers or any trapped longs will be looking to sell into any bounces that we have. And then, of course, that's what makes it roll over. IWM, yesterday, triggered the sell signal on the break of trend. I think first target is 205. Second target is 195 down at the 200. You can see the fib retracement levels, more or less 180 and then 165. First things first, let's see if we get the move to 205 support. If that doesn't hold, then we have the 200, and then we got to take it from there. Here was the break yesterday. Got to move all the way down to 212, which was a well-defined level that we had. If there's a flush move, my target would be 209. You got support here and support here. If it gets really nasty, 207. But just like the strategy that we talked about, be thinking about covering into here, not going short. You don't want to short into the hole right now. You want to tactically scale out of shorts and recycle long for a bounce. IWM, 30-minute, fib levels, bounce levels, 215, 216, and 217 are your bounce targets. Outside possibility is 219 and 220, recapturing all of this. I don't think you're going to see that. I think it's going to die somewhere in here between 215 and 217. One positive out of yesterday's action on the IWM is no gap. There was a reach up candle right out of the gate that came up and filled the gap up into the 218s. So there's no gap to worry about on IWM. At this juncture, I want to thank any new viewers to the channel. I really appreciate your time. I hope you're getting some good information on the levels that I'm providing and a little trading strategy to put and meld into your own strategy. I think you'll have a lot of luck focusing on execution in and around the levels that I give you. And I think if you do that, your trading will improve. Hit the subscribe button and the like and the thumbs up. I'd really appreciate that. Jump over to the show notes. You'll find a link to register for all my content. You'll get everything, including many midday updates that I send out during the day, trade ideas, market observations, etc., that never make it to YouTube. So that would be great. And you'll also get an invite to the trading room. We've had several new people join just this week. We'd love to have you. Nice little community. A lot of good-hearted and sharp traders there, providing a lot of energy and good ideas. So I hope you take advantage of that. Longtime listeners, do me a favor. Pass the link along to somebody in your trading network. Post it on a chat board that you're on with a plug. I'd really appreciate that. And certainly leave a positive comment or give me ideas for another video. I'd love to hear what you want to see, and I'm happy to do that for you. So, okay, let's move on to Fatman. Facebook on a sell signal. Break a trend. Sitting on the 50 EMA. Tactical traders, if you see a bounce, you can be long against the 50 EMA, and that number is 298. If you lose the 50, you're coming down to 295. There's a support layer there. If you break 295, then you're coming in to the low 280s. Apple. Sell signal triggered yesterday. Here's an uptrend line. There was dual support at 124. We said yesterday, that's got to hold. If you're an Apple bull, that's where you would logically be stepping in at trendline support and lateral support. That's the perfect place. Anybody that tried that got stopped out. Anybody that bought in here, anybody that bought this breakout on the last earnings, they're underwater, right? So Apple is on a sell signal. You see the 200 coming in at 118.50. I think that will ultimately be tagged, and then we can find out from there what's going on. What would change my mind? What would change my mind is if the bulls step in, buy it up, and close the day today or in the future above 124. Then you gotta back off your swing short. You'd be stopped out, and then reload. Let me just show you the 60-minute chart if you're tactically trading it. Here's the, where we closed yesterday. We do have an open gap. One thing you might see on a bounce is rocket it up, fill this gap, back test this big resistance line at between 126.50 and 127, and I think it dies there. You might see that, that's a nice trade. That's a $4 trade, but then it fail. So there's a lot of cross currents. Remember that the daily resistance and trend line is at 124. And if you see that everything is bouncing, but Apple cannot get back above 124, then you'll realize that resistance level on the daily is causing a problem there at 124, because now we've broken below. Bulls really need to recapture 124 to get back in business. Tesla, sell signal, break a trend, lost this pivot area. Remember, we had been watching 670 for a long time. It broke 650, came down, and now we're testing, or very close to testing, the 200 at 580. So let's say you're not in it and you see a break of the 200 or a break of 560 where this layer of support should be. You see a break of 560, you definitely can't be long. And if you want to be short, because I think then your next targets are 500 and 460. If you want to try and be tactically long, you can be long against the 200 here at 580 and hope for a bounce back up to 640, something like that. Because, I mean, think about it. If you were a Tesla bull, you got to buy the 200. It's just as simple as that. If the bulls are still really in control of Tesla, you got to buy the 200. If you're a Tesla bull, I mean, that's the logical place. If not there, you certainly got to buy 560 because of this support layer. And if I was trying to be a Tesla bull and I'm trying to swing it long, I would buy the 200. If it came into 580, I would buy the 200 and I'd set my stop at like 559 and say I give it $10, or what is that, $20, and then looking for, a $60 bounce is what I'd be looking for to get that 3 to 1 risk reward ratio. But regardless, this 560 has to hold or it's over. Notice the big void here where there's, basically not been a lot of trading. You lose 560, I think you're going to come to 460 pretty fast. I don't think there's a lot there at 500. I think you blow through that and you end up at 460. Microsoft, another big name. Yesterday we said, gotta hold 245, gotta hold this breakout. Now everybody up here realizes that they're wrong. And it not only lost the breakout, it lost the uptrend line as well. And we said yesterday, much below 242, you're going to be on a daily sell signal. Now the door is open to 230 down here. What would change my mind is recapturing trend. If the bulls can buy it up, close back above trend, and then recapture the breakout level at 245, then that's a stick save. They came in and saved it. But given all the other sell signals and kind of the posture of the market, you may see a kickback, into here, but no, not a recapture. I don't think they're going to recapture 245 anytime soon. Of course, if they do, change your mind and go long on a recapture at 245. But anything short of that, no, I think it's lower from here on Microsoft. Amazon on a sell signal. Why? Rejected at the top, below all the moving averages, came back into a well-defined trading range. The automatic target, once you've broken out from a range and then return inside, is the bottom of the box. In this case, we've got the 200 smack dab in the middle at 3,100. So we have two layers of support. We have 3,100, which is the midpoint of the range, and we've got the 200 at the same location. If you were an Amazon bull, what would you be thinking? You got to buy the 200. You got to buy the 200. You got to buy 3,100, and you're looking for a bounce back up to 3,250. If that does not hold, if 3,100 breaks, we're coming right down to 2,950, and at the bottom of the box, that will be a major turning point. Why? Because you see back here, the bottom of the box was still well above the 200. Now the 200 has come up inside the box, and what that means is a break below, once you're on the south side of the 200, there's less people that want to be buyers because that 200 is so important. And then if you lose 29.50, there's a massive, massive void below. So we're coming into some critical days ahead for Amazon. As you know, we got to find out in the coming days if 3100 holds, but if not, down to the bottom of the box, and then a big decision has to be made. Google is the best looking one. It's the only FATMAAN name that is not on a sell signal. Why? We've got the uptrend line that has not broken. We've got the 50 right there. So it's sitting on the 50. It's sitting on uptrend support. Google bulls, got to buy here. It's a logical place to buy and look for a bounce. If they can't, if price falls appreciably below 2200, then you're coming down to 2100 at the top of this consolidation area. And if that doesn't hold, then you've got a gap test down at 2000. So Google is the last man standing on FATMAAN as far as not being on a sell signal. Netflix on a sell signal. Why? Well, it's in a big trading range, a $90 trading range, but now it's below the 200 and below key support here at $4.95. The door is open to $4.70. And so anything south of $4.95, odds favor being short and looking for $4.70. Now, today, you get a bounce into into $4.95. I think that would be a logical place if you are motivated to be short Netflix. I would be looking in that area between $4.95 and $500. Really $4.95. You can see all the moving averages turning down. Those are going to be resistance levels on the way back up, and really the first one is the 200. In this environment, I don't want to be long Netflix. There's nothing here that tells me that you want to be long. You're kind of here in no man's land. If you want to try a long in Netflix, take a long at 470 at the bottom of the range. Then you can comfortably sit there with a tight stop and see if you can get a good sized bounce. Semiconductors. This is a channel off of the March lows. We broke that. Below all the moving averages, below the 8, 20, and 50 day averages. Yesterday we talked about being short, tactically short. Well, we talked about being short up at 242. Whether you did that or not, I don't know. If you did, you got to be pretty pleased because you're already up $15 or so. But let's say you're not in it. Tactically speaking, if price recovers 227.50, you can take it long and look for a bounce. Otherwise, I think you stay short and look for a move down to 215, and then you've got the 200 coming in at 213. That would be a place where I would look for a bounce or a logical place for bulls to step in. But I want to just do this for you in real time to show you how I would do it. Notice the double top. We got a high here and a high here. Look at the bearish divergence. PPO momentum here on the first high and at a lower level on the second high. Same thing with RSI. RSI here for the first high, much lower for the second high. So if you call that a double top, how do you get a measured move? You take the distance between the high and the low of the structure. Here's your V. That says 16%. The double top structure is triggered on a break of this low. So you take your measuring tool, you go down 16%, and you get 180. So just looking ahead on a purely technical basis, nothing else being considered, if this double top structure were to play out, you'd be looking at 180. And I can almost assure you, just by having looked at it, that would probably align with either a 38% or a 50% fib retracement level. And so that's how, as a technician, you can kind of line up different factors that if this did break and you had the Fibonacci laid on top of it, and combining technical support, the double top structure, and the Fibonacci retracements, when you get a cluster of all three of those, then you can look for a good support in that area, and you can anticipate and plan on either covering your short or looking for a long at that point. So let's recap this here. This is what all I've got for you this morning. The posture of the market has changed. We've got sell signals, SPY, QQQ, IWM, Facebook, Apple, Amazon, Tesla, Netflix, semis, all on daily sell signals. The only one that isn't is Google, right? That's a bearish posture. Does that mean, Armageddon? No. But what it means is you've got to reorient yourself for pullback mode. And then we're going to have to see how far the pullback takes us before we can start honestly looking for bounces. So if you're long a bunch of stuff, look for a bounce to lighten up. If you're in a particular name that you want to hold, sell covered calls. Sell calls above the level and try and collect some premium, or buy yourself some protection on the downside. For instance, I'm just picking a name. I'm not saying to do this on Apple, but let's just say you're long a lot of Apple shares. Then you can say you had 100 Apple shares and you want to protect them. You buy one put, right? You buy a put or a couple puts. What you gain on the puts will offset what you're losing on the common shares. So whether you decide to sell covered calls, you could actually do both. You could sell some calls above, collect that premium, and then use that premium to buy yourself some puts, help mitigate the cost. So that's just one strategy. Like if you didn't want to, maybe for tax consequences or whatever, you didn't want to get out of your Apple, don't just sit there and watch it go down. Be proactive. Sell some upside calls, buy some downside puts, insulate yourself as best you can on that downside risk. If you've got stocks that you're not married to or don't, or short-term trading vehicles, start looking to the downside. And if you're not comfortable with shorting, that's fine. Just you can step aside, or you can look for the there's inverse ETFs all over the place for SPY, for QQQ, for IWM, where for semis, where you can be long and that stock will go up when the index is going down. So you can get leveraged inverse ETFs on most of the big indexes, and that would be a way where you could, actually be short without owning, getting into options and buying puts and all that kind of stuff. You can be long the inverse ETF and benefit when the index is declining. I hope I made that clear. Anyways, let's wrap it up here. Remember our watchwords. Keep your head about yourself. Don't get flustered. If you feel yourself getting knocked off balance, step away for 5 minutes. Come back. Look at the levels. Don't look at the money. Look at the levels. And, am I coming into support? Have I broken support? Am I coming into resistance? Have I broken above resistance? Am I capturing levels or am I losing levels? And that should inform you on which side of the trade you should be on. And if you're on the wrong side, after you do that analysis, just get out. Don't hope and pray. Take the medicine early. If you don't know what to do, don't do anything. Don't guess. Be sure what you're doing, and if you're not sure, step aside. There's absolutely no shame in that, because if you're not sure, you're not going to have any conviction about what you do, so you're going to get whipsawed in that environment. But for today, I am looking for either a flush move down out of the open, a move to cover shorts into that flush move, and then looking for a bounce based on the oscillators being overstretched. I'm not just going to robotically do that. What I'm going to do is combine the flush move, if we get it, and combine that with the known support locations and wait for price to either react off that level or stabilize at that level. And that would be a place where you can shoot long with a stop just below and see if we get a bounce. And if we do, sit comfortably by and wait for that bounce to play out, then recycle shorts, because I think there's going to be a lot of people selling into that bounce on names that they think they got trapped in. So Chris Buss with Trader's Profit Compass, and also, I'll cover that later. This has been Chris Buss with Trader's Profit Compass. Have a good day of trading. Talk to you next time.